Alrighty, everyone, we're going to go ahead and get started with this playbook trade today. Before we do, let's go ahead and get a risk disclaimer done. Just a reminder, trading futures and options on futures involves substantial risk. It's not suitable for all investors. Past performance is not indicative of future results. Go ahead and put in the comments that everything is clear. You can see the screen, you can hear me. Let me know what's going on, and let's go ahead and kick this. Alrighty. So the name for this playbook is called the Silly Scratch, and you'll see in a little minute why I'm calling it that. Can we hear? Okay, working clear, good. All right, so first I wanted to cover what are playbooks, why are they important? Essentially all they are is it's a grade setup, it's a trade that you have found success with, and it's something that you want to be able to go back and look at to remind yourself of, hey, this is a good trade. When I see this opportunity 1 month, 1 year down the line, I want to be able to take it again. So it's building your trading business, finding those trades that meet your personality requirements and are something that you can repeat over and over again with success. They also allow you to identify errors in your execution and make you better, which is one of the main reasons I decided to playbook the trade that I took today. And they're going to give you a deeper understanding of your own methodology. So by having to really compartmentalize what made this trade work, I now have a better understanding of the way that I trade, and it's going to make me better, as well as obviously express these ideas to you guys and expose you to possibly new techniques. So, maybe down the line, MK will do a playbook, and it's something that I can learn from him, he can learn from me, and it's a very good experience to expose yourself to other kinds of trades that have edge. So this was a trade on the E-mini S&P 500, going into kind of the macro conditions when you're talking about doing a top-down analysis. We've been rotational for the last 2 weeks in the E-mini S&P 500. There's been a very mixed fundamental sentiment with just a lot of crazy geopolitics going on, as well as earnings. There was just a very unclear sentiment as we were going to be risk on, risk off throughout the last few weeks. We have the FOMC coming up, all that. So what did that lead to? That kind of rotational environment leads to what we call these solid CVAs, so solid composite value area and distribution. So what that means is you can see from right here we have 1014 was that date up through 1023. So basically from the 18th until the 23rd, that's all of this. And all this is it puts a new block, or a new shade of a block for every 30 minutes, and it just shows you essentially where the most time was spent in the market. So right there, here, this blue block is your open, that's your point of control, and these gray lines are your 70%. So 70% of the time that we were in this distribution was spent right here. And you can see there wasn't a lot of interest down here, and there wasn't a lot of interest up here. So that's where these shades come from, is if we break above where we spent most of our time, that means we're probably going to start getting imbalanced up. And if we break below, that's going to be a bearish sign for me, and we're going to start going down. I have a video on market profile, so you can go back and look that up if you're more interested in how this chart works. And again, I'll answer questions at the end of this video. We could see yesterday, we kind of pushed up into this area, started to fill this area in, and formed this really nice distribution. And then this was the overnight session. So that's kind of what we were walking ourselves into, was we had just kind of pushed out of the previous value area, and now we're kind of imbalanced up, if not trying to test these highs. Looking at it on a more standard chart, this is our 90-minute chart, and it's a monthly VWAP. So you can see after we were unable to break these 3,000s, unable to break it, unable to break it, unable to break it, we broke it, came up, and as you've heard a million times, old support or old resistance becomes new support. So now we have this kind of 3,000 inflection point that I was really kind of keeping my eye on over the last few days. So that's kind of where we are sitting, is in this sideways condition as we just broke above this 3,000 significant figure. The morning prep, I have plenty of videos of me going over how I do my morning prep, so I'm not going to go that far into it, but these were my hypos. Oh, go away, Google Slides. There we go. Rotational between 3012 and 3000. If we could get buyers above 3012, that would be a bullish sign for me. And if we could find seller acceptance below 3000, that would be a bearish sign for me. So what that means is as long as we stay in this green, I'd be rotational, expecting us to just keep doing what we were doing up here, printing these W's, W, W, W. If we could break below 3000 and find sellers, I was going to get bearish and look for shorts. And if we could break above the 3012 right up here, that was going to be a very bullish sign, which we would then come and test these 15s, push up to these 20s, and then there's a skyline up here at 24 or something. And so this was the prep I did at 7:30 in the morning. What was our actual narrative coming into this? So we had that massive distribution I was talking about, which was a 9-day composite value area. That was acting as our support. We had our weekly VWAP at 3002. So that was confluence with that 3000 level. And so you can see, we pushed up into this new level, and now we had 1, 2, 3, 4, 5 tests of this this 3000 figure. You could even consider this 6 if you really want to. Needless to say, they kept trying to drive it down, and they just could not break this 3000 figure. It's kind of like what we have right now with our all-time highs, where we just can't break the all-time highs. So that was what I was working with. This right here is the actual trade that I entered. So really I only had 1, 2, 3, 4 times it bottomed off there. Looking at our acceptance picture, again, we're looking back at this green bull zone. We had value migration higher, so we were trading down here. We migrated to a higher level, and now we're expecting this lower level to act as a support with value migration to the upside as we enter price discovery. Our DVA, which is just our VWAP, right off the +2. So again, here's the trade. And this is why I call it the silly scratch. And that's why I'm playbooking it, is because this was a really silly thing to scratch. And obviously, it could have been a very nice trade. Right off the +2. So here's that. Actually, that's a typo. That should say -2. Right, here's that -2. So when I'm looking at my components for a trade, we have that narrative. We have that acceptance. Here's that VWAP that I want to see, where we have a decent place, because if you're in a rotational environment, you want to be fading these extremes. So you want to be looking to short when you're in these +2s, and you want to be looking to get long when you're in these -2s, so long as you stay rotational. The rhythm, here was the overnight session, so you can see this is what your average rotation was looking like. Down leg, up leg, down leg. So when I was going to enter this trade, that down leg, it fit with the rhythm. The expectation was, hey, if this is how long these average lines are, it would fit within the rhythm of the market for it to then come back up. So we could check that off. Here's where things get a little bit goofy. And this is the only reason really that I ended up scratching out of this trade. So the orange box is where I entered. This is where I ended up getting long. And as you can see, this is where I got long. Price only goes up. It's only going up from there. But what did I see in the order flow is price is going down, or sellers are getting aggressive. Sellers are pushing. This is a massive divergence. If we have price going up, order flow going down, right? And there was a very high probability, being that we've already tapped that level 4 times, we were going to try and break 3,000. So that's really where a lot of the sentiment came from, is, hey, look at the order flow. This is where I got long. It's going down. Price is going up. That's a massive divergence, and to me, that was something that it's kind of like I'm flying without one of my engines. So I'll go more into that in the next slide, but here's more of the order flow. So this circle right here is where the actual shift happened. So if we go back, we can see right here, there's this shift where now all of a sudden order flow starts to go back up. That happened right here. So that would have been a place where if I had still been in the trade, then that would have been a very good thing to have fixed, because that was the biggest thing going against me, was this seller aggression. If you look at it on a footprint chart, you can see right here is where I ended up getting long, right in these 3,001s. So if you look before, we had this push up, 1,300 contracts right here. Look at this selling, massive selling, selling, big seller, very little buying interest, big seller, big seller, very little buying interest, big seller. So here's where I ended up scratching out of the trade, was up here, because all I could see was big amounts of selling coming into the picture and very little interest in buying. 158 versus 1300, 29 versus this cumulative 900, and then this entire bar was just 400. So the order flow is very, very, very mixed, which was the core tenet behind me entering that that scratch. Now, again, we look at it. We had a good narrative. We had good acceptance. We had a good DVA. We had good rhythm. Poor order flow coming into it. So I had 4 out of 5 of my engines, and it led to that scratch. I also, it was right before the U.S. cash open, so I don't usually enter a position before the market opens because it can add that extra volatility to the mix. But I ended up doing it because it was at the right price, and I had all of my other factors going for me. Again, biggest area for my improvement on this trade was trade management. So I had to go back, and today I've been thinking about it, saying, how can I make sure this doesn't happen to me again? The solution for that is develop a system to avoid a scratch out. What am I going to do when I have an order flow divergence? I'm only flying with 4 of my 5 engines. Instead of just scratching it, I could have just moved my stop to break even. I could have just said, all right, I'm up 5 ticks. Let me just move my stop to break even. If the order flow is giving me that solid divergence and it comes down and takes me out, that's fine. It's a scratch. I can now qualify a short to the downside below 3,000 if we can get sellers. So this is going to become my new process goal for next week. Each week I have goals that I set, and I manage those goals throughout the week, and that's my priority, is executing well on that one task. So this week it was about getting high quality setups, and next week we're going to focus on trade management and start building out that framework to qualify when I scratch a trade. When do I get out of a trade? Being able to have Boyd Bob, haha. Call I don't trade gold. Gold's got Bob in it. That's how.